Hi everyone, today let's talk about PCE data, then we'll get into the calendars and the chart. Then we'll finish up with my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PCE data came in lower than expected. Everything continues to look good on the inflation front. Core PCE was up 1.9%, below the Fed's 12-month target, so that is great. You like to see it. Core PCE increased by 0.1 for the month, so that's pretty good, and was up 0.32 from a year ago. And like I said, everything continues to look good on inflation, and this was more confirmation that inflation continues to look strong, indicating that we should see cuts sometime in the first half of next year. And then moving over to the calendars, you can see building permits, good. Durable goods orders, also good. And then PCE data, minus 0.1 for the headline number. And then core, you have positive 0.1, but still lower than expectations. And then the year-over-year headline number was 2.6. That 1.9 that we talked about on the previous article was the 6-month number. So they don't publish that, but still good to see it on the shorter term basis. Then you got new home sales, worse than expectations, but all of the Michigan data was pretty good in terms of consumer sentiment and expectations. Inflation data, not great, a little bit higher than expected. Overall, pretty good on the data. Just a reminder on seasonality, we are in that bullish period, so we do expect bullishness over the next 5 trading days. In my opinion, we did pull some of this rally forward with the massive rally in November and early December. You can see the beginning of December is typically pretty flat, and then that last couple of days of December is very strong, but really we rallied throughout December, so just keep that in mind here with seasonality. Moving over to max pain, still sitting at 471, the same as it was yesterday. Total options about the same. And then stock price did finish just slightly above max pain. Not at the top of the puts though. We had been seeing really strong closes. Finished right in this 473 area, right at this first put wall, which does make sense. So we finished below the call wall. Calls are starting to make a difference. We're not seeing the same strong close that we had been seeing for the last few weeks. And we'll see if that follows through to next week. Definitely interesting to see that on max pain. Moving over to the charts, take a quick look at these before the Sunday video. You can see we rallied up with that PCE data, touched almost those previous highs, ended up establishing a lower high after testing 474, pulled back into that 473 area, tested this downtrend line, ended up holding. If that trend line breaks, watching for 470.80, and you can see that here on the daily chart, gap up in doji, continues to be a consolidation at this level. 474.78 is your upper level, and then you have the lower one here at 468.30, and that 9 EMA, we continue to hold above that 9-day moving average, which continues to be strong. Momentum, not great. RSI, still bullish, but not great. Still an uptrend, but showing signs of weakness. Moving over to the NASDAQ, similar thesis, rallied up aggressively, took out my 408.80 level. That triggered me to roll up a little bit. I didn't get super bullish because we're still in the same trading range, did not take out this previous high. This is a lower high now, and that does not look great. So you have a really strong rally, dip low, midpoint, rallied back up, lower high established. If this breaks down here, that could be your initial signs of a change of trend. Definitely something to watch for. But in terms of the longer time frames, still a bullish trend, still well above the 9 EMA, gap up in doji, momentum and RSI, same thesis as the SPY. Just looks like an uptrend with slowing momentum. Moving over to the Russell and the Dow, very similar thesis, rallied up on PCE. The Russell actually tested that 201.88 level, which was the same high from Wednesday. You can see that consolidation continues to grind slightly higher. Did make a new high on that wick, but then quickly broke back below it. So you're still in that same trading range, 198.75 to 201.88. And then looking at the Dow, similar thesis, big strong first candle, fell in all the previous candles, did close right on top of my level, 373.74. As long as that level holds, you could look for another push to that 376 level. You can see we wicked that level here on the 20 December candle at 11 o'clock, and it does look like we're falling a little bit more after hours. So we'll see how that plays out and how it opens on Monday. Moving over to Apple and Tesla. Apple continues to lead markets lower. Not great. Bearish momentum, bearish RSI. Continues to make new lows, closed below 193.96. Next level for me is all the way down at 189.96. You could argue there might be some support around 192, but those levels are a little bit tight for me. I'm looking at that 190 area with that 144 EMA here on the 4-hour chart. Below all the short-term EMAs and VWAP does not look great here for Apple, which obviously is not good for markets. Tesla tried to rally pre-market, fell, ended up bearish on the day, tested 255.44, couldn't hold above it. Now we're still looking back down to this shorter term trend line, marking these previous wick highs, which is currently sitting at 246.50 or so. Moving over to staples and discretionary, staples actually looked really strong, so it rallied pre-market, dipped in the mid-session, ended up holding its gains up around 71.22, bullish momentum, bullish RSI. We'll see how that one opens on Monday. That'll definitely be interesting. And then to the contrary, we saw discretionary selling off. So seeing a little bit of rotation into staples and out of discretionaries. We're still in the same trading range for discretionaries. We talked about it yesterday. Got the low down around 178.38. And then the upper range around 181.74, and we're still in that same trading range going forward. Moving over to breadth on the 20 and the 50, 20 wick, the 9 and 21 EMAs, broke down a little bit, still technically bullish on the day, still in the same trading range, still below 86.53. And then looking at the 50-day average on that weekly close, you can see it was a bullish candle, got right to the high here from the 24 July candle. Momentum did step down. I would expect that to follow through over the next couple of weeks. Still could hold in this range for another week or two, so it doesn't mean that it's going to break down immediately, but typically once you see that first step down, there is follow through. Talked about this just about every video now. Steps down, steps down, steps down across the board, continues to do it, and I do expect that to happen here once more on the 50-day average, indicating some weakness to come around the first or second week of January. Moving over to the dollar, showed a little bit of weakness. It was really weak yesterday, hit that 21 EMA, broke down further, did wick a low, did come back to the 21 EMA. If it shoots up from here, back tests that 21 and 9 EMAs and then rallies up, that could be interesting. Still looking at divergence on the price action with lower prices, higher RSI versus this low here from Thursday the 14th. Still waiting for the dollar to show some follow through to the upside. We tried to do it here, broke down. Trying to do it again here with a wick low. Want to see a confirmation candle up on Monday if it's going to do it. And then any kind of bullishness on the dollar is going to be weakness for equities in my opinion. And then moving over to the VIX, you can see here we had that wick high yesterday, big bearish candle here today, so not great. Momentum did step down as well, also not great. You'd expect probably one, maybe two more candles, test these support areas, see if that holds. If it does, then we're looking for a swing high. If this area breaks around that 1275 level, then we're looking for a push back down into this 1177 area and potential consolidation at that level, which would give you a little bit more bullishness on equities going into the Monday session. Moving over to my accounts, I did net about $100 or so. You can see I still have that 187.5 call here on the IWM. Obviously with a covered call, I did lose a little bit on those calls. My max profit here is $15 higher, so right around that 202 level, which is about 50 cents higher from current prices. And then looking at the Qs, I did end up rolling back out once we pushed above that 408 level. And we are sitting basically right there. You can see it. We finished just a couple of cents above it. And then markets fell a little bit, so did get some money back on those calls. Obviously massive credits on that position, really far out, 56 days from now. Thinking I'm probably going to leave these alone, especially because I think some bearishness is coming. I do have some 408 puts for Monday at $1.73, and you can see I'm in a profit there already. Might roll those out once again. I do think there might be a little bit of weakness with the fall that we saw at the end of the session, but we'll see how it plays out. Everything's still bullish in terms of trend, and you have to respect that, at least on the longer time frames. Overall, not a bad trading day. Could have been a little better, but positioned pretty well going into the next week. Moving over to my P&L graph for my Qs position, you can see I still have a lot of room before I lose any money to the bullish side. I'm not purely bullish. I do have those short calls, which would cause me to lose money if markets rallied super aggressively, but I do have quite a bit of room there over the next 2 months. Even if they did rally pretty aggressively, my break even currently is sitting up around 433 or so quite a bit of room before I would start to lose money. 433 is a long way from here. And then to the downside, I do have quite a bit of room as well, sitting around 389. And part of that is twisted because I do have these two short dated puts. Once those puts come off, I would have even more room to the downside. And those do expire on Monday. Let me know down in the comment section what you think of inflation. Is it dead? Does it matter? Definitely let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.